Welcome back, traders. This is the Options Trader Lounge, and I just want to greet everyone a belated happy 4th of July. We hope that many of you had an enjoyable one, especially if you got to spend time with your family and friends. We hope that you are all safe. And since many of us here are from the United States, as well as I am from Las Vegas, Nevada, I just wanted to just talk a little bit about freedom. Freedom isn't free. There's a price to pay for it, and those who has gone before us definitely paid that price. And so it is our responsibility now to keep that going forward and continue to have this great nation to be a free one. If we are here, choosing our own path, we have that right and that opportunity to freedom. And so that is what makes this country great. And so today we're going to be discussing the S&P 500, the price action that took place today. Also, since we are on a shortened week, this is going to be one of those week special where we get to have 4 trading days to the week. So let's get right into it. Welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. Get yourself a drink, sit back, relax, and let's get right into it. Now, looking at this here, we have the S&P 500. We have made a substantial move the prior week. This is one of the bigger trading weeks that we're looking at here. This was last week's of June 26, 2023. From top to bottom, this was really a price action move that really took place, opening down below and closing up high. That's roughly a 13-point range. So that is pretty incredible. This is on the back that, the prior week to this week candle was a down week. We opened up here at 437 and closed somewhere around 433. And across YouTube and whatnot, there was a lot of fear mongering. A lot of people got short off of 2 weeks ago, and this is the best example of the great humiliator. The stock market is the great humiliator, and it trapped a lot of bears, and the bears got destroyed. A 13-point move could do a lot of damage to the bears, and we could clearly see it on the weekly candles, the weekly chart here, that we have developed a strong momentum trend that we can clearly identify here on the MACD. Back here in June of 2022, we had this bottom here, and then we got a higher bottom on the moving averages on the MACD indicator, indicating there is a higher low. And then eventually we created higher highs, and that is what creates a trend, my friend. They say your trend is your friend, and in this case, it is just that on the S&P 500. So we are developing a strong trend here, and the price action says so. So we just gotta trade the price and trade the action and manage our risk. That is all that we got to do here. So we know that we are going into the shortened week, and usually whenever we have a shortened week, we tend to have a lighter volume in terms of trading. So that is what we can expect this upcoming week. However, there are going to be important economic data that's going to be coming out. And so looking at the economic calendar, we have on July 7th the all important unemployment rate. This is probably going to be a higher number. Roughly around 2 months ago, there's been a lot of news that's been reporting on the fact that tech has been doing a lot of layoffs. Now, as we know, tech layoffs unfortunately is very saddening for the employees, but the stock market could care less in terms of the troubles that it makes for individuals. So the key here is to stay invested during these times, because when big companies like Apple and Google make these layoffs, well, Apple hasn't really done much layoffs. And instead what they have done was minimize their job postings. But companies like Google and Meta, they've announce major layoffs within their company. But what does that do to the stock price? It actually it actually improves their outlook because that is one way they can put on their books that they are cutting expense. And as we know, during the pandemic, all of these major companies were hiring like crazy because what they wanted to do was to ensure the fact that they had the substantial workforce to continue operations. But as things improved, they realized that they overhired, and so what they've done was started to announce layoffs. And on the books, what it shows is that it is actually allowing them to have a margin of profit because with lower expense and to continue to have consistent revenue, that just means bigger profits that they could have for the company. And so we can expect to see all of these minimization of expenses in the upcoming Q2 report that should be coming around the corner within the next few days to weeks with all of these major tech companies. So we can see that across the board, looking at the triple Qs, that we are hitting critical levels here. Back here in March of 2022, a high of 371 on the triple Qs. We are currently at that level, testing this level here, and also we have to note that we are testing it with strong momentum. You see here the down below on the MACD indicator that you have strong separation between the upper and lower moving averages. So that essentially indicates that the trend hasn't subsided, it hasn't slowed down. So we can see and we can forecast that this trend is more than likely going to continue unless we have some sort of catastrophic news that's a turn of an event or some sort of black swan event that's going to really take this market down. But with this strong momentum, any bad event is going to be bought up because we've seen that many times before. There's been several bad news in terms of like the debt ceiling and the debt crisis with the banks. All of those bad news were bought up by the markets. And that is why the market is the great humiliator. It tends to trap the bears, and everyone who fearmongers on YouTube are really wrong about the outlook and the direction of the market because the market will embarrass a lot of people on their predictions, especially when it comes to fear. That's the thing about YouTube. You see all these like fire thumbnails of like the market crashing and whatnot. Um, that's all good and fun to create views and attention. But when it comes to trading, you have to disconnect from the the news outlets and the headlines and really just trade the price actions. Data on the stock market is the most important thing that you could look at in terms of the direction of the market because wherever there's a buyer, there's a seller, and whenever we have more buyers than seller, that moves the market higher. So you really have to pay attention. Yeah, as we can see that just looking at the S&P 500 alone, it's continually creating higher lows, indicating that buyers are trying to get in before the deal goes away. So if we get a pullback in a market, that is something that you'd want to buy into. Now looking back at the S&P 500, this is what I want to focus on here because this is very critical. We have we have strong momentum on the weekly candle MACD, and then two, we are yet to test these critical levels up above the 450 level on the S&P 500. This is going to be a point where the market may turn around or even stall or even break through. We won't know until it reaches there, but it's more than likely going to head there once we get more confirmation in terms of different reports that comes out that will be able to carry the market forward. Now, again, if the market turns down on the unemployment rate that comes out, just be prepared to buy because looking at the way the price action is moving right now, um, it's continually creating higher lows, because buyers do not want to miss out on the awesome deals that are coming in with the market prints. And so this is something that we have to continue to take advantage of and be alert. Um, and just be prepared that you're not going to be left behind, because obviously that is what the market is doing. It's creating a lot of FOMO because, for one, there's been a lot of uh, bearish positioning in the market. People have been either selling calls or trying to take put positions and are totally getting wiped out because there's just too much buying pressure. We haven't yet seen a blow off top. We've seen it a couple times, almost several attempts back here. Three weeks ago, we seen this blow off top, but what happened uh, several weeks after? It got bought up because obviously the bears do not have control of this market and they have to cover their shorts. And so, which obviously produces buying pressure. So that is something that we have to pay attention to. Now, looking at the VIX, what do we have here? We may have formed a bottom for the time being. The bottom of this candle here is 1273. Now, we are obviously right in the middle of this weekly candle formation, and currently the VIX is up above its opening price of the week. Currently, the VIX is at 1418, and we have a strong downtrend, something that we have to pay attention to because we have a up market trend on the S&P and the major averages, but we have a downtrend on the VIX. The moment we see an uptrend on the VIX, an uptrend in the market, that is a point where we have to continue to be vigilant and be prepared, because that could be a turning point, because that may give us a sign and a clue that the ship has turned and we have to be prepared for a downward move in the market. So at this point, we are not there yet. However, we may get there just by looking at the bottoming wicks on the prior 2 weeks of the VIX. So that is what we have here. This is right in the middle. This is a midweek update, and obviously currently the S&P 500 hasn't made much movement. It's right in the middle. I think we can conclude that we are waiting for either strong economic data to come through or earnings. Those are the two big things to come through. And obviously we have the Fed decision that's going to be coming around the corner on July 26th of 2023. That's roughly around, I want to say 2 weeks from now, 2-3 weeks from now. Yeah, so we just have to be prepared. Make sure that we manage our risk accordingly, because that is all that we can do as traders. We can manage our position sizing and manage our risk whenever we enter a trade. And so if you liked the video that we had today, please make sure you go ahead and subscribe to the channel. Leave a like for the algorithm, because it will definitely help out this channel in terms of views. And if you definitely find this video useful, and maybe a friend could definitely find use of this video, please go ahead and share it. We would like to, spread the awareness of what we currently saw today in the market's price action, and currently where we stand, and also the future outlook that we have to prepare for within the next few weeks. Thank you again for watching the Options Trader Lounge, and we will see you on the next one.